So to start things off, my name is Michael Batal. I'm a Director of Strategic Insights here at MindBridge and one of the first US CPAs to join the team. I've been with MindBridge almost 5 years now, working closely with customers and prospects to understand the value of MindBridge. I also help develop a number of the different use cases here at MindBridge and ideas around how anomaly detection can be leveraged within internal audit, controllers, CFOs, as well as external audit teams. So in today's session, some of the things that we'll be covering are a background of MindBridge, how we became a leader of anomaly detection, MindBridge's approach to anomaly detection, in which we'll also go in the tool live, showing you some of the explainable AI, and then we will wrap up with a Q&A. Please feel free to enter questions into the Q&A section, and we will address those at the end of the presentation. So in terms of a background on MindBridge, MindBridge was established in 2015 with an emphasis on helping financial professionals gain greater insights into their data and greater visibility into their data, using an ensemble AI approach to identify anomalous transactions. Over the years, we have taken numerous steps to become best in class in terms of our depth of analysis within our modules, and our product can be relied upon by financial professionals for a number of reasons. One is we do go through a third-party algorithm audit with Holistic AI, which put on a session during this EDGE conference as well. And then we do have a number of certifications that surround our platform in terms of security with our ISOs and our SOC 2. And in terms of the growth of MindBridge, being around for a while and being a leader in anomaly detection, with our unique approach, this has led the company to being recognized by Forbes as well as Gartner. And we have also established key relationships with Big Fours like KPMG because of our best-in-class approach. In terms of the relationship with Gartner, this is recently established and we were listed as a cool vendor in the finance because of our anomaly detection capabilities. What I want to touch on is kind of the findings within the report. In their report, they indicate that anomaly detection is going to be a key part of the future because as the volume and complexity of data continues to grow, it's going to be important for financial professionals to support early detection of problems, the ability to identify errors quickly and efficiently in order to be compliant with the financial statements. I'm sorry about that. It's going to be important to have error-free financial statements because that's going to increase the confidence of the financial professionals dealing with it and the decision-making around the organization. So this is, obviously part of the cool vendor in finance, and we were also part of the hype cycle because anomaly detection is going to be a key part of the future for financial professionals. So this brings us to the MindBridge approach of anomaly detection, and we've got our first poll up. So go ahead and answer that poll so you can get some CPE credit on this session. Yeah, we'll give everybody just a couple more seconds here. Okay, great. So what we'll move into now is the MindBridge approach. MindBridge has built upon the traditional approaches by incorporating an out-of-the-box ensemble approach, which leverages machine learning. So these control points can be utilized and configured around your financial data to analyze and uncover unknowns within that data. This ensemble approach essentially represents a combination of leveraging these control points or series of tests at the same time. In doing so, this helps our software identify truly the riskiest items because for something to be risky in our system, it needs to trigger a number of these different control points. An example of this is, if it's a manual entry, high monetary value, and a rare flow, it's a riskier item than if we were just looking at these tests individually. So by combining these tests together, we're able to really uncover unique insights within the data set. In terms of some of the testing that we have within the tool, the traditional rules are something that are binary in terms of the way that we're looking at the questions. So, was it a duplicate document? Was it an empty text field? Was it towards the end of the analysis period? The statistical models include your kind of accounting statistics with the two-digit Benford and complex structures, as well as risk profiles in terms of the transactional details. So we're actually able to do a variance analysis at a transactional level using our period over period change control points you can see in the bottom left-hand corner of this screen. And then on the right, the key differentiator of our system is really the machine learning. And we'll dig into this in a little greater detail in just a second. But what machine learning really boils down to is understanding the behavior within the organization and being able to develop a baseline of normal activity and then what becomes an anomalous from that normal activity. So the first thing to cover, though, is the ensemble AI approach. What does this mean? It means that the whole is greater than the sum of the parts. And what the whole is greater than the sum of the parts acknowledges is that the value or the impact of a complex system can often go beyond what you would expect simply by adding up the contributions of individual components. So instead of just putting together these items as individual tests, by combining them and looking at them as a single score, we're able to develop a stronger signal of what's truly anomalous within the data set. So MindBridge can help identify these anomalies and irregularities more accurately because of this approach, and it reduces the likelihood of false alarms, which enhances the overall effectiveness of the work that you're performing. The second key element is the machine learning. So why is the machine learning so good? Let's take a look at this visualization here. This is a very simple visualization with orange and blue dots. And what we can see here is this algorithm is essentially designed to to separate the orange versus the blue dots in this data set. So as you can see, this is not a straight or linear path through the orange and blue dots. It is very nuanced in terms of the way that it navigates through the orange and the blue dots. If you think about complex data sets and the ability to analyze these data sets, you're looking at lots of interesting data points and lots of different neighborhoods of where that data could lie. So being able to navigate and draw a line that's cleaner through the data, such as machine learning can do, is extremely helpful in terms of creating that focus within your audit teams and within your finance functions. One of the key questions that comes to my mind and comes up regularly is why is machine learning so good compared to the traditional rules-based analytics? So a couple of the things that I've identified by using MindBridge on a regular basis is pattern discovery. So with unsupervised machine learning, it reveals the hidden patterns in the data, much like a human would. So a human can intuitively identify connections and relationships, and that's what AI is able to do. Another kind of feature that lends itself to a human-centric approach is ambiguity handling. So similar to a human being adaptable, unsupervised learning navigates ambiguity and uncertainty in the data, reflecting our ability to make sense of complex and unclear situations. Another key aspect of this is autonomous insights. So unlike rules-based systems, unsupervised machine learning extracts insights from the data, resembling kind of a human cognitive process of recognizing similarities and generalizing that knowledge. So it's essentially what I identified earlier. It's looking for those patterns automatically for you in the same way that you would look for these patterns. The last kind of area that I've identified is data-driven exploration. So not only being able to analyze these patterns, but present them in a clean and intuitive way is very important to understanding the behavior within data sets. And MindBridge has built a very intuitive platform to support the financial professionals leveraging our system. So what does this all boil down to in terms of efficiency and effectiveness within your engagements? You stop chasing the noise and you're able to focus on the things that matter the most. As you can see here, MindBridge, through this ensemble approach, reduces a lot of those false positives and a lot of that extra noise that exists around the data set and focuses on those key areas that are impactful to the financials. This can help to identify miscodings, errors in kind of the classifications of the transactions, bypasses of controls, lack of controls. and we provide a very guided way in terms of looking at this information. So with that being said, we will go ahead and launch our second poll and give everybody a couple seconds here to answer that, and then we will go ahead and jump into the tool. Alrighty, so what we're going to head into next is a demo of the MindBridge solution. During this demo, we will focus on how the control points are displayed within the program and how we aim to build explainable results within the MindBridge system. So this is our core platform with the general ledger. On the right-hand side of the screen, we can see all the control points that are out of the box that support this particular analysis. If I go ahead and head into our second tab here, we'll see that any of our subledger analysis also offer the same approach in terms of out-of-the-box control points to support the analysis in terms of how we're looking at the data. To reiterate the MindBridge approach, this is a combination of business rules, statistical models, and machine learning, and each of these control points has a unique weighting. That weighting is being factored into the overall risk score of each transaction and entry within the system. The way MindBridge aims to present these high, medium, and low risk transactions is by classifying them based off of that underlying risk score. So high risk is greater than 50% risk, medium is between 30 and 50%, and low is less than 30% risk. Essentially, what we're doing here is we're separating out what's common and recurring within your client system based off of those underlying patterns. The medium risk is the more complex entries that are not seen elsewhere. However, these still fit into the more or the typical business process within the organization. And then the high risk are the anomalies and the most extreme outliers that are not seen elsewhere within this data set. In terms of explainability, we're able to drill down into the data table, which will give us the higher risk transactions. When we drill down into a high risk transaction, that will bring up the debits and credits associated with the entry, as well as all of the control points being triggered. In terms of the control points, these are sorted from high to low risk, and a couple of things that we can indicate is some have an X, some have a check. These are your binary yes or no questions. And then the more complex statistical models and the machine learning is on a low, medium, and high scale. And the reason for that is, if it is an unusual amount, how unusual of an amount is it? If it is a rare flow, how rare of a flow is it? So having the scale from 0 to 100% helps us indicate this is extremely rare, or this is moderately rare, or this is frequently seen. As we indicated earlier, this is the ensemble approach where all these tests are performed simultaneously. And if we wanted to understand a little bit more about which particular areas of this transaction are affected by which control points, we can select that control point. So for example, if I want to see the cash expenditure, here's the cash account where the cash expenditure control point was being triggered. If I want to see which line item was triggering the suspicious keyword, in this case, we've got two line items associated with the suspicious keyword. So this is another way that we're aiming to help build a profile around each transaction within your data set to give you that added visibility and augment your judgment on how it will affect your financial statements. In addition to being out of the box, there is the ability to configure these control points. So in the engagement settings, as we head into the general ledger, we can see our risk scores here, where we can see all the control points and the weightings assigned to these control points. What we're able to do from here is select specific areas or parameters, such as suspicious keywords, and build in the ones that are relevant to our organization and what we aim to test. For example, I worked with an organization that had issues with Amazon gift cards. So what we could do is we could build in and edit Amazon into the memo field or gift card into the memo field, and we can search for those transactions and risk rate those as higher risk within the system. Another example is the high monetary value. The high monetary value is set at the top 2% of the ledger. However, we can edit and adjust this threshold to the top 1%, the top 5%, depending on the profile of our organization and the volume of transactions that could be in the high monetary category. The last example is end of reporting period. So this is set to the last 10 days of the year, would indicate higher risk transactions because of cutoff issues. What we're able to do is edit this threshold to the last 1 day, the last half of the month. And that gives us the ability to skew this towards the industry that we're working in. So this has been an example of the general ledger in terms of understanding the control points and how they impact different areas within the analysis and build that visibility for the financial professionals. What we're also able to do is in our subledger areas, which we'll get into in the upcoming sessions, is how these control points can be leveraged to build out explainability around specific tests that are being performed, like unusual amount for the vendor. So if I go ahead and drill down into this particular control point here, I can open up, we'll just go ahead and head into the high risk company here. And I can see how this overall risk is related to the other risk within the entity. As I scroll down, I can see where that selected entry falls as it compares to other entries within this particular data set. So this provides a lot of useful visualizations to show where the selected entry lies as it relates to the other data within the tool. This helps build that explainability around why this transaction was different and why it was selected by our system. And now it's up to the financial professional to determine its impact on the organization. So as we scroll through here, you can see a number of these different visualizations to help support the look of or the explainability within our tool. A couple other aspects that are important to note is in our settings, in our support section, we have a knowledge base that provides detail around all these control points. It will tell you how the control point is operating, what it's looking for, and how the results are being calculated. In addition to knowledge base articles around the control points and how we've identified anomalies, we can also provide a holistic AI report, which digs into the specifics of the algorithm and how it's performing. Both of these are available to our professionals using the system to help them understand the results. So if we head back here, we've got a little bit of time for Q&A. And let's go ahead and head into the questions. So the first question, how do you gather information about false positives? I would say false positives are things that are sometimes a misconception where you think it's a false positive. However, essentially it's still not common and recurring, and it gets triggered by our system. So an example of this is I was working with a client last week who had a unique dividend distribution that was being recorded. Now, this was a known situation that was showing up as higher risk, and the client considered it to be a false positive. However, when you think about the nature of the transaction, it was unique in nature. It was for a dollar value that's not frequently seen through the equity accounts. It had a relationship that was infrequently seen, and is something that the system needed to surface in order to give the financial professionals access to determine the impact. So although it was known with the team that we were working with, you can see through the concepts of how that was identified that it was not a false positive in our system. One of the other features that we do have is the ability to segregate populations. So if there's a known population that's triggering higher risk transactions, for example, accruals are unique in nature and maybe not part of our typical testing, what we're able to do is separate out those by designating the population, selecting is not to exclude those from the results. So it gives us the ability to hone in on the transactions that are meaningful to the tests that we are performing. Okay, just pulling up some of the other questions here. Okay, what kinds of details, such level of data do I need to have with this kind of stuff? So we do offer a number of different modules. Our core module is a general ledger where we can extract 100% of the general ledger from a variety of systems. What we look for is an Excel or CSV file. We map that into our software, and we're able to analyze the data accordingly. Not only do we work off of the general ledger, we're able to deal with subledger information or really any financial transactional information. So as long as it has our core fields, which can be found in our knowledge base, we're able to perform an analysis around that data. Um, and in terms of the level of details, you can include a variety of different fields. So the more fields you include, obviously the more multidimensional views and cross-correlating that we can do within the analysis. Another question that has come in is, what do I do if I know if I have problems in my data, can I still use these concepts? So essentially garbage in, garbage out, but in terms of most organizations, there is consistency to how things are being recorded. So although there may be certain problems in the data, we can go ahead and use a population to segregate those problems to remove it from kind of the typical transactions that are being seen. And we can also, there's a lot of ways to work around these problems within our tool to offer those insights. Because of the flexibility of the analysis, you're able to drive a lot of unique insights, even with when there is problems in the data. And it looks like we have a couple more questions coming in, so I will go ahead and address these for those of you who have stuck around. Are control points customizable or being updated over time? Are we able to filter certain concepts out of the high, medium, and low risk? So we discussed that subpopulation and filtering this one already. In terms of the control points being updated over time, we are continually monitoring and adjusting the control points to provide our clients the best results within the system. In addition to that, you saw the configurability during this presentation where we can configure a lot of the out-of-the-box control points. In our most recent release, we've also introduced our expert rules control point, where you can go ahead and build in certain rules that are relevant to your organization and include those as control points within the analysis. Our goal is to create consistency in results. So this would, we would try to establish what that test is being used for as it relates to the overall objectives of your engagements. Great. Well, I appreciate everybody's questions and looking forward to discussing more in our next session here, GL anomaly detection.